In the following video, we're going to build upon what we were looking at with fundamental analysis, and we're going to go to the next step. Whenever you want to trade individual stocks, ETFs, funds, things like that, you always want to start with the fundamental analysis. That's why we did that video first. Once you do the fundamental analysis, which helps you to understand the company, its value, and whether or not it's worth investing in, the next thing you would like that you would want to do would be to do a technical analysis, and I'm using Apple for this. Now, if you are just starting out on technical analysis, the best thing to do is to use a one-day chart. So I've got that set here on TradingView, and if you just step back for a second, one of the things that you notice is that going back a really long time, this is at least 6 years, even though it can be easy to get whipsawed in the near term, which if I zoom in here, we're only going back to in September when we made a high around 138 on Apple, and then came down and up and down, up and down, and kind of melted up and then down and then up, and then we just had a recent correction really low. You see here that this is something close to 20% of a pullback. A lot of people, when they're first looking at a trade, they don't have the right time horizon, or when they're looking to invest, and you have to really consider, what are you actually trying to do? If you're trying to trade, then you need to care about a slightly smaller time frame, and you need to care about the uptrend or the downtrend. But if you're actually investing, then you need to be thinking long term, long time horizon. So that's why I recommend you would start by pulling back and looking at the overall trend. Anybody would be able to see that since 2015, this stock has generally gone up. It's Apple, it's a good company, it has a good business model, and even though there were a couple of instances in 2018 going into 2019, and then early 2020, that we saw some large pullbacks, and then in September and then recently, in general, you're going to want to hold this for long term. Pays a dividend, so that's always nice as well. But what I want you to see as we pull back, you notice especially these last few pullbacks, they pull back to a spot and then they resume up. And so technical analysis helps you to see the pattern, the trend, helps you to see entry and exit points and things like that. So for example, you can see here, if I zoom in a little bit more, you can see I have a green line and a red line. I actually need to change this red line to green because I mark green with support, and I'm going to make this one in the background more so that it's not as obstructive. And then this one is the next resistance line I'm looking at, and I actually probably could move this up a little bit, and I'll explain why in just a moment. And I'm going to bold it so that I know where the resistance is. So the best thing that you could do is start with a blank chart. And then when you pull back on a one-day chart, what you'll want to see is where the touches are. So I'm going to go over here to TradingView, and I'm going to start with horizontal support. And you can see right here where my crosshairs are. We have kind of a top right here in 2018. And then what I want you to notice is that in 2020, when we had a drop, when we had the pullback during the March crisis with COVID, it dipped down almost exactly to that top. That was back in 2018. What that tells me is that was a really strong resistance level, but then it became a strong support level. So I'm going to put a horizontal line and make it green, right? So you can see when it got, if we zoom in back here, we have this resistance, and then as we came back to test the resistance, it sort of consolidated right below it and then eventually worked its way up, came in for a retest, and then resumed off. And then, of course, in 2020, we had a little bit of a dip below, but in general, you could say that this is pretty good support. And so that's kind of what you do in setting resistance and support levels. So because we had a high up here in February of 2020, I'm going to place another support right there. Okay, and then as we get in closer, there are some things we could set. So I've got a touch right here. It was resistance. This was, I believe, when the split was announced. We had a little bit of a pullback here in late September, another pullback here end of October, early November. So to me, that looks like a good support line right there. So I'm going to mark that. All right. So that's how you would set horizontal support. Now, if I'm thinking resistance, I'm going to zoom in a little bit closer here. So I've got a level right here, September 1st, September 2nd in this area. Again, late December, it popped above it and then failed the breakout, and then in early February also showed itself to be good resistance. So what I'm going to do is I'm going to place that right about there, make sure that it's red. Right? So resistance is what price can't break, and support is where price won't fall below. So what I like to do is anything that's not immediately relevant, I always try to lighten up so that it doesn't distract me, because I don't want the chart to be super distracting. Okay, so that's how you do support and resistance. Now, what my advice to you is, if you're looking for a good place to enter, you want to buy off support and you want to sell off resistance. Okay, so if I could give you an example here, I'll just darken this line right here. We came up and we hit it September 2nd, it looks like, and then we came back down on a correction, kind of worked our way back up. Because that was resistance before, when we get close to it here on December 28th and 29th, I'm thinking if I'm just trading the stocks, if I'm not holding it long term, then I'm thinking of selling right here, at least taking a little bit of my profit. Okay. On the converse, if we do this, if we see that this became kind of a support area back in mid to late September, and then we came up and then came back down, I'm looking at that as a support level, right? So then in October, November, as soon as it tests it and then comes back up, I'm taking that. So, for example, if it bounced once, twice, 2 days in a row, and then started coming back up. So if I bought on November 3rd at the open, I bought it at about $109, $110. Okay, so then what's happening is if I'm trading, I'm going to try to sell at this resistance that I found up here, or at least take a little bit of profit. So if we start from the open and we go up to about that resistance, or maybe to the close of the price bar on the 28th, that's a 24% gain. You take that any day, right? So that's why drawing horizontal resistance and support is helpful, because it helps you to figure out entries. Now, the other thing that is really helpful to do is to draw ascending and descending trend lines. So in order to do that, it can be kind of tricky, but what you want to kind of do is you want to look at your chart and you want to find touches. So for this chart, it's going to be a little bit wonky, but maybe we'll try to go back here and look at it from the low in March. So if I start here, I'm kind of noticing down in the late March section, it starts a slow rise, and it seems like it kind of picks up a little bit, pulls back, picks up a little bit, pulls back. So what I'm going to do is I'm going to pick a spot, and I'm going to draw the trend line, and I'll darken it up so you guys can see it. All right. So draw this trend line like this. So you can kind of see what's happening is falls down, retests, comes up, retests, comes up, retests, and so on, all the way up. And then even here, it kind of became a good ascending support trend line, right? And then it became resistance over here. And if you want to know whether or not your trend line is good, what you do is you clone the trend line, okay, and then you try to make it touch some of the other spots on your chart. So you can kind of see it fits. Let me zoom in a little bit. It actually fits this pretty well, right? So you've got a bit of a touch here, a bit of a touch here, a little bit above, I guess. Touch here, touch here, touch here, touch here. So to me, that says that my trend line is pretty good. Okay, and what's really cool is markets are very symmetrical, and so what you can do is you can use those trend lines to match other parts of the chart as long as it stays in the uptrend. Okay, so what I would do here is, you can see how I'm adding a whole bunch of trend lines here. What I would do is, if I have a trend line, if I have good trend lines, then what I'll usually do is I'll try to take the trend line and duplicate it to the bottom. And then what I usually will do is as the trend continues, what tells me that the trend is breaking, and then therefore the chart is going to follow a different pattern, is when it falls below and then retests and then stays below. So right here, if you look in this part of the screen, what you see is that we fell below first in July, but came right back up and then took off, melted up. We fell back down below, and then on a close, we were below it. Then the next day closed above it the next day, closed below it, closed below it, closed above it. It kind of looked like it was going to stay there, popped up, and then fell down. So what I want you to see is, how did I know that the trend was ending? Right here. Right here, there were multiple consecutive days in a row where the close was below this prime trend line, this kind of lowest trend line. All right. Now, you could also potentially take this trend line that we've cloned, and you can add it below. Okay, but as you can see, it stops working out as cleanly once you come below. Right, so that tells you, that's another way that tells you the trend is gone. Right, so then you can get rid of these lines. See if I can erase these. You get rid of these lines, and that will tell you that you need to find a new chart pattern to look for, or new trend lines to look for. Now, your vertical and your horizontal trend lines, your horizontal resistance and support, those don't have to change. You can make small adjustments as you go. I mentioned I made an adjustment to some of my horizontal trend lines because I just felt it looked better. It seemed like a better support line or a better resistance line. You can adjust those, but you never have to get rid of them. Once something becomes support, it will stay support for a long time, and then once it becomes resistance, it'll stay resistance potentially for a long time. Okay, now something that some people use, I don't necessarily recommend it because you can go off of price alone as another way to find a good buy. Now, if you're long-term investing, you never want to buy higher than you need to, right? But in the long term, stock prices generally go up in successful companies. So if you're trading, maybe this matters more. But if you are kind of holding on and you're like, okay, I don't want to necessarily buy at that high of a price. Like if you take the Apple chart, for example, and you can see starting here in late July, it really took off. And so you might be thinking, okay, well, what price point should I be looking for? Because, hindsight's 20/20, but right here, it's not very clear where the support or the resistance is as it's coming up because it's at all-time highs. So what do? Well, one thing you could do is use a moving average on the daily chart. Daily chart is probably the best time chart to use if you're going to use moving averages. Most common ones that you should use is just a normal moving average at 50 days and a normal moving average at 200 days. Okay, so now what's really cool is that you realize, okay, so we had the March sell-off, right? And if you had never gotten into Apple before, the 200-day moving average would have demonstrated like your once in a lifetime opportunity to buy. Well, maybe not once in a lifetime, but anyway, when you hit that level, that would have been a good buy spot. Now the problem that always happens, and this is the same with horizontal resistance and support, and then your ascending and descending trend lines, your moving averages, people always get freaked out on the way down. They're always freaked out it's going to go to zero, but that's the time you need to buy. When everybody else is selling, so long as it's a good company, that's the time to buy. So if you had bought when this first crossed the 200, you would have bought it at 61, right? And there may not have been as much certainty, but now look at where it is. Even after all these pullbacks and all this chopping over here, today looks like we were trading at 121. So if you bought when it crossed the 200, you know, it's more than twice that amount. It's 100% gain, right? So that's pretty good, okay? So why the 50-day and the 200-day? So if you look, generally the price tracks the 50-day, and then it'll come back and touch, take off, come back and touch, and right, you can see it's kind of following along its 50-day moving average, and then it comes back up, right? And then look over here at the recent pullback. Right here, it's kind of touching, almost touching the 200-day moving average, and it looks like it's going to come back up. I would say that the 50-day moving average marks a typical small correction in a security. When you get to the 200-day moving average, that's a larger correction. And those are both great buying opportunities. So if you're swing trading, then you want to buy maybe off of when these moving averages get touched, or off of your ascending and descending trend lines, or off of your horizontal support or resistance. You buy and sell based off of those. If you're long-term investing and you're looking for a good entry, you usually can't go wrong if you go off the moving average. You don't need to add in all these indicators. You don't need to add in oscillators or things like that. Price alone will generally tell you what you need to know. And if you need a little bit of an extra indication, you can throw in those moving averages. But I already told you, like if you want to go back, as soon as I established this spot right here in September as resistance and established this in late September as support, look at what happens when I throw the 50-day. Right? Support line right around this trend line or this horizontal support in late September, it became a good spot to buy. And even though it came back down underneath, it still bounced back above. And it only became a problem later, in February. But what's really crazy is here, look at where it crossed. It crossed here at 110, still trading above 110. So that supports the idea that if you're actually investing with the proper time horizon, long-term time horizon, you're generally going to come out better than when you went in. Okay, so that's a little lesson on technical analysis using Apple. I hope you guys enjoyed this video. If you did, hit the like button, subscribe to this channel, recommend it to somebody who is learning how to invest and needs to learn technical analysis. Be sure to check out the other videos if you have not. Thank you for watching.